2020 was the hardest year of our lives. Australia is still reeling from the economic and social impact of the COVID-19 pandemic. However, the pandemic has accelerated the push towards a digital economy and empowering Australians through technology. More of us are working from home more than ever before, choosing when we come into the workplace. We're using video calls and other communications tools to save time and get more done. One sector critical to the nation's ambition to be a digital economy is the Fintech sector, and its growth through the pandemic has been critical to the economic recovery. It's employing thousands of Australians already and growing rapidly. It's also transforming the way we manage, save, and spend money. Australia's largest emerging companies are Fintechs, and they are drawing overseas investment into the country. Many, like Afterpay, Zip, and Upbank, are household names. But crucially, they are helping everyday Australians get smarter with their money. They are teaching them how to save, plan, and capitalize on every dollar they earn. Fintech is slowly but surely changing the way we think about money in Australia. Not only is it directly contributing to our economy, but it's making it stronger. Here at Intersect, we're discussing this future and asking the big questions. We'll be hearing insights from new voices in the sector and giving a platform to some of the behind-the-scenes talent that have put Australia's fintech industry on the map. So sit back and enjoy Australia's most thought-provoking conference, Intersect.
Thank you. Great. Welcome to the final edition of Intersect's digital program, run and hosted by Fintech Australia. My name is Rehan Mark de Almeida, and I head partnerships and marketing at Fintech Australia. Once again, I apologize for the postponement of this particular session, and I'm glad you could all make it today. This session is on fintechs and partnerships in the future, moderated by Tim Oman, global leader of fintech at BDO. The digital program is an opportunity to extend our reach and showcase the latest fintech trends, policy developments, or companies at the forefront of new technologies or products for those that could not attend the physical event and who had purchased the virtual ticket. I would like to take this opportunity to thank our major sponsors, the Victorian Government, Austrade, Xero, BPay, and Data Action. I would also like to thank our digital sponsors, Manuva, the Argyle Network, Q2, and of course, BDO. And now I'll hand over the mic to Tim to moderate the session and introduce the panelists. Thank you again for participating.
Thank you, Rehan. It's probably hard to believe a week ago we were down in Melbourne at Intersect, and the world has changed quite a bit, unfortunately, with the COVID outbreak. Last Friday was supposed to be the first session, and the third time's the charm, and we're very happy to be the last program for the Intersect week. Good morning and welcome to the digital event, Fintechs and Partnerships, the future. And this, as Rehan mentioned, is the last part of the digital program. Today, we'll be discussing the value of partnerships and cross-branding, including why partnerships within financial services are so critical for the future success and the various types of partnerships available and tips on how to approach the partnership. At last week's conference, this was very, very topical. A lot of the presenters referred to partnerships that they'd entered into and walking around having coffees. Again, this is very, very topical. So hopefully the people that have dialed in are going to find today's conversation quite interesting. As Rehan mentioned, my name is Tim Ammon. I'm BDO's global leader for FinTech, as well as the national leader for financial services here in Australia. And we're a very active supporter of the FinTech ecosystem, and we're proud sponsors of Intersect and FinTech Australia more broadly. At BDO, we provide a range of professional services, and we particularly like to work with startup fintechs. And we like to provide financial advice in helping them scale up to their next part of their business. I'm also today joined by two fintechs who are meeting the funding woes of businesses and are doing so through partnerships. I'm first joined, I'll introduce Real Ross, co-founder of Button. Button is one of Australia's largest B2B transactional funders. They provide businesses with cash flow solutions by offering simple, secure, and instant finance solutions for everyday business needs through their integrated technology. They partner with B2B marketplaces, including service platforms, wholesalers, distributors, aggregators, CRM systems, and fintech disruptors. I'm also joined by Paul Barker, Director of Strategic Partnerships at Valiant Finance. Valiant Finance is a business loan marketplace that helps businesses secure finance. They provide Australian small businesses with free access to an automated system that connects businesses and lenders in matching borrower requirements with lenders who are most likely to approve. They are currently working with over 80 leading lenders across Australia, from banks to alternative business loan providers. Welcome both, and very happy to see you again on screen. Let's start first with the why of partnerships. Probably over the last 2 years, we've seen increased competition and the unbundling of banks over the past few years. We've seen a rise of partnerships, sometimes done well and sometimes not. Within the financial services sector, there's something for everyone. For fintechs, they can offer new tools, platforms, capabilities, and approaches to improve customer experience, while an incumbent offers maturity, experience, data, and resources. While banks utilize fintech partnerships as a way to diversify and boost their revenue streams, fintechs use it as a way to scale and reach new markets. While initially fintechs were deemed as a threat for incumbents, fintechs have shown how partnerships can be harnessed. Over the past few years, we've seen a significant shift from startups offering purely B2C by aligning more closely towards partnerships with financial institutions that offer a B2B to C model. It's expected that over the next few years, we'll see more consolidation in the market as new fintechs enter the market and look to scale quickly, and larger financial institutions look to capitalize on digital solutions fintechs have to offer. So now I'll get the panelists involved here. Rio, can you tell me a little bit more about the rise of partnerships and what are some of the market forces that have been driving this?
Sure. Again, obviously, thank you, Tim, for moderating today. And again, I think I speak for Paul here as well. We're honoured to be closing out the Intersect 2021 festival today, and what better way to, I guess, close it out with the fact that partnerships. And I guess from our point of view, from Button's point of view, our basis is partnerships. Everything we've done is partnerships. Button was built to partner, but it's not a standalone product. Button is not out there, want to be front and center. We always want to be behind the scenes. We want to be powering other businesses. And the only way to really power other businesses is through partnerships. And again, I won't speak to Paul. I'll let Paul speak for himself, but we're in the same boat. Valiant's all about partnerships. Button's all about partnership. And this is why I think, coming together on this forum is actually quite an opportune time as well. I think, Tim, you mentioned throughout the festival, and we saw it as well, everyone was talking about global strategy and global, companies coming together, cross-border, fintechs coming together and working together. There's only one way to scale in this industry. There's only really one way to scale, and that's through partnerships, platform plays, origination, mass distribution, digital mass distribution on a digital scale. I mean, no matter which way you look at it, no matter which way you really talk about it, there's only two main things. You build a platform and you plug that platform into somewhere else, and that's what's going to use it. If you have a standalone platform with no users, there's no point in having a platform itself. And this is, I think, one thing we found when we went out and started to build Button, a number of years ago. Our main driver was always, how do we scale and how do we grow? And there's only one way to do that, through partnerships. So I think, from our point of view, this is the future. Partnerships is the future, and you're only as good as your next partner. And I think, Button's definitely achieved that over the last couple of years, and I think Paul can speak to that as well through Button and through Valiant, of which we are in partnership as well, just so happens. So, yeah.
Thanks, and we'll talk a little bit more, about Button in a moment. But Paul, maybe you can just touch on a little bit about the partnership with Australian Post. You've been recognized as a finalist in Fintech Australia's the Finnies, which, as everyone knows, has been pushed back until July 21st. We clarified with Rehan before what that means. That means everything's, the gala night and the awards are all happening on the same day. So we're looking forward to coming down for that. But Paul, maybe talk a little bit about that partnership with Australia Post and the experience.
Yeah, look, Look, thanks firstly for having me on, and Tim, thanks for moderating. Rael, always a pleasure to share any stage with yourself. I think the partnership with Australia Post is one that from inception to actually launching in October last year was a very long process. It was about 3 years, 3 months from initial conversation and concept really to then launching in October. If you followed any of the news last year, you'll know launching anything to do with Australia Post in October was not the best timing, but absolutely a partnership that we identified from the beginning as a real good opportunity to associate ourselves with not only one of the oldest businesses in Australia, but a very iconic and trusted Australian brand. It's a very new kind of step forward for us as a fintech, having a physical presence in Australia Post stores. So you'll be able to see the kind of co-branded solution marketed in stores by the kind of counter teams, posters, flyers, and the like as well. From a kind of actual onboarding perspective, I'm very fortunate with our team, with our products and engineering team in particular, that where we don't have legacy systems, we're able to integrate very quickly and work very well with institutional partners, whether that's been Post or any of the other partners we've worked with. Equally on the flip side of things, with the lenders who we see as partners that we work with as well. So going through all of the kind of onboarding process, really the thing that slows us down the most partnering with institutions is legal, compliance and risk. And that's something that I think we probably could have pressed the button to launch in March last year. And that extra 6 to 7 months was really going through all the red tape, and especially with Post being a government organisation, we had to go through a lot of red tape and a lot of extra steps as we go through the process. Equally, that's down to the fact that it was something that was so new for Australia Post to be playing in the business loan space with a referral service. So we think that's fairly groundbreaking in terms of what we've done. And the hope is actually that opens up for other fintechs to have the aspiration to go and partner with an Australia Post or other organisations as well. And it really opens not necessarily opens the floodgates, but open the door to more of those conversations happening for Australia Post with other businesses, but equally for fintechs. It's a matter of going in and having those aspirational partnerships that you really want to work on. You've got to be persistent. I come from a recruitment and sales background, and if you're not persistent in recruitment, you won't get anywhere. So not even the, being knocked back and someone saying no, but the delays, just dealing with that and keeping it front of mind for, what's a great financial services team to deal with under Deanne Keitler at Australia Post, keeping it front of mind. So when the opportunity is there, we can really take it with both hands and run with it as well.
I just might add before you jump in, Tim, that on one point that Paul said, I think it's quite important to note how Valiant and Paul, the guys, have taken it and plugged into Australia Post and I guess propagating this product through Australia Post. If Button wanted to now go to Australia Post, I'd have to start that process from scratch from day one. The fact that we already have a partnership with Valiant allows us now to go together with Valiant back to Australia Post and give them a bespoke suite of Button products that they can now foster and integrate within their existing network. So we're always looking, I guess, from a Button point of view and Valiant point of view, no matter what partnership, it's really a top-down approach. It's not, all right, I've done one partnership and this is the box. It's like, I've done a partnership with this player. Where else are they plugged into? And where are those players plugged into? Where are those players plugged into? And if you sort of work down the chain, eventually it's that top-down approach where, Button will sit in here, Valiant will sit in here, the business users or business case will sit in here, and eventually it just really spreads out. So I think that's another sort of point to mention, that you don't need to go, and what we've found individually and personally, you don't need to go one by one. You find a strategic partner and then propagate your message through that partner as well.
And I think that was a good point I was just going to raise, because I think, you mentioned you started a few years ago. I guess just in terms of how you've got the right cadence now in terms of looking for the types of partners, but maybe you can just share a little bit of experience of when you started out to where you are now, where now you're trying to leverage your existing partnerships a little bit more, but maybe just talk a little bit about you.
Yeah, no, absolutely. I think when I joined our business 4 years ago, we were just under 2 years old. So from a kind of mandate or strategy perspective, for me, was very much build brand awareness of who Valiant are, and let's go and speak to a lot of institutions do a lot of, I guess, discovery really around who is the right partner to partner with. When we find the perfect partner, we'll let you know. But I think if you had the perfect partner, there's no future role in terms of how you actually manage and expand that partnership and explore different channels within that business as well. But I think certainly that initial phase was a bit more brand awareness than actually, hey, we want to partner with you and get volume and acquire leads and customers from you. So that was probably the first year to 18 months. And then we really nailed down into, okay, who in this next 12 months, who are the key 5 businesses we want to partner with? We actually managed to tick off 6 in the last 12 months to January this year. One that was a bit of a surprise, and the other 5 really just kind of fell into place. And we were able to achieve a lot through COVID. I think working from home brought a lot of focus for people. And I think there was almost a little bit of concern around job security for people in different businesses. Some of the larger institutions needed to take advantage of different channels. Qantas, a prime example, where we're able to launch a very successful partnership with them, where from a loyalty business perspective, they need to be looking outside the box because people weren't in planes at the time. So I think, getting that focus then into, who are the 5 or 6 key partners we want to partner with, and really going further and further down the rabbit hole as such into the integration world. The further we can integrate with the partner, the better we can actually work with a partner to surface offers to customers. Business lending isn't always on need for customers, so it needs to be in front of them at the right time with the right offer that's specific to them. There's no use putting an offer for ute finance, for example, in front of let's say a tattoo removal business. It needs to be the right offer in front of the right customers at the right time. So some of the partners that we're running through a pilot phase with a major auto and equipment business at the moment. That's very deeply integrated into the vendor platform that business offers to customers. And then the kind of next cab off the rank for us will be a very deep integration that we're pretty excited about and be launching in the next 2 or 3 weeks.
Okay, good. Well, you're gonna make a comment there.
Yeah, I just want to make a comment. Actually, that was quite again. Paul raised a good point that there's no point, say, putting a ute finance in front of a tattoo parlor, unless the tattoo parlor drives a ute. So, but what we've seen as well is exactly the same. That because for those of you that don't know, Button overlays and integrates into third-party platforms, agnostic technology, provide instant funding at the click of a button at that point of transaction. When the end user, when that customer, when that business needs finance, at that point in time, at that point of transaction, that's where the button sits. And that's exactly what I think Paul was saying, that if we had the button on the homepage, or if we had the button, 4 or 5 steps after they've done the transaction, they're not clicking the button, accessing that funding, accessing that finance, because they don't need it then. They need it there. They need it when they need it at that point of transaction. And that's it. That's been our sort of our go-to-market strategy, our motto. We don't want to sit after the transaction. We don't want to sit before the transaction. We want to sit where the business user needs it and where they transact. And that's where we'll overlay, and that's where we'll pull our data via API, and that's where we'll make that 10-minute decision, bang, and that's where we'll fund it. So.
Okay. Just before I switch to choosing the right partnership model, I guess from a regulatory perspective, do you guys have any particular views in terms of what could be done differently to, I guess, increase the use of partnerships?
I think it's twofold. Look, from a Button point of view, we're B2B. We're not B2C. We only play in the B2B space, so we don't deal with the consumer model, the late fees, the after fees, the penalties, etc. that the other consumer players that have to deal with and have to play with. So we're somewhat sit outside that regulation. But be that as it may, and I think, again, and I don't want to speak for Paul, but I think across the business lending spectrum, you can see we're sort of self-regulated. We're not out there to pillage the client. It's all about being fair, because we know if we're fair and equitable and reasonable, they're going to click the button, they're going to access that finance, they're going to come back and use it again. They're going to come back and use it again. If they have a bad experience at day one, if they can't get through the registration process, if they drop off, they're not coming back. So from a partnerships point of view and from a business lending point of view, we're sitting here saying, we're going to offer them the greatest experience at the best price, at the click of a button when they need it. Why are they going anywhere else? They're not calling, their bank. We know the banks are now tightening their belts and it'll take them, 3-4 weeks to get that money. We're going to hit them right there and then. And we're going to take those partnerships and we're going to work with those partnerships and work with those users sitting within those platforms to say, here's a product you want. It's a seamless experience. Why not come and grab it by the horns?
Okay. Maybe let's shift a little bit to the different types of partnership models, because obviously there's lots that, that can help build, borrow, buy a gap that people have. So I guess in terms of, Rael, maybe you can talk a little bit about the types of partners you work with. And I guess maybe from a fintech perspective, what should they be thinking about when choosing a proper model, a proper partner?
Sure. So look, we have strategic partnerships that have been in the press. So we'll stick to the ones that are currently public, not the ones that are sort of in the pipeline. MYOB, which was a large, huge partnership, a huge win for Button, a strategic partnership as well for Button. Easy, which is another huge strategic partnership as well. And if we sort of look at it again from the top down, what we said, MYOB, huge number of addressable market, over 1 million addressable clients within that space. Easy, 25,000, 30 plus thousand restaurants in the space, tens of thousands of drivers. So, I guess when Button sort of sits on that platform and on that top level, and we pull it down, we say, well, look at this addressable market. Now, again, you touched on before, Tim, and Paul touched on it as well. We're plugging into platforms that might have 100 business users on it. And then we look at MYOB that has over 1 million addressable market on that side. And if we see the two ends of the spectrum, Button is still the same technology. Button still sits across both mediums. So when we look at it from a top-down point of view, we say, well, if we can service these 100 clients, these 100 businesses on platform number one, and we can really give them what they need, and then if we can look at sort of the Easies and the MYOBs of the world through that platform and give them exactly what they need, we've won on both sides of the coin, whether it's 100 clients or whether it's a huge addressable market. And the same with Easy. We're solving problems, and if we can solve problems through digital distribution, through mass distribution, through the click of a button, it's really a win-win. And that for us is I guess from a strategy point of view, that is where we want to sit within a partnership model. That we want to help the little guy, we want to help the big guy, we want to help the guy in the middle, but everyone has the same seamless experience, that same user experience, that same warm and fuzzy feeling saying, I've got what I needed, I like the experience, I'm going to tell my friends about it.
And Paul, I guess maybe if you can extend, I guess in your view, maybe you can talk about the different types of partnerships and what's your experience with each of those partnerships, the capabilities, etc.
Yeah, absolutely. I think I guess the key kind of partnerships that we're certainly talking about, and the goal of them is acquiring customers. As a startup, scale up, that's what we're trying to do through partnerships, is get access to a partner's customer base and work with them very closely to make sure we're putting the right solutions in front of them. So there's other kind of partners. I guess a capability partnership is, from our end, that might be bankstatements.com.au that we use as a primary way to assess a customer's ability to borrow. From an equity partner perspective, so there's different models where a business may partner first and then have an opportunity to actually acquire equity within that business. From a brand association perspective, that's something that certainly is important. In the early phases of a startup, if you have that, a big flagship partnership like a Qantas or Post is really powerful for us in terms of opening doors or having further conversations with other partners. A couple of partners that we're talking to at the moment, if we're able to say, hey, look, here's a link to Qantas with the business loans page, this is how it works. It's very powerful, and it takes that first hurdle of, this is something completely new we've never done before, kind of out of the equation, that if the Qantas legal team and risk and compliance are happy to engage and do this, then that takes that first question. That's typically the first question for any institution partnering with a fintech or a smaller business is, what's the risk to us? What's the potential damage this does to our client relationships? And then any potentially regulatory risk that might come back, or reputational risk as well. Because regardless of a compliance script that may say this is a mere referral to Valiant from Australia Post, at the end of the day, if the customer has a bad experience or is missold a business loan, whatever else it might be, they're going to go back to Australia Post, and Australia Post can be the one who will be dragged through the papers. So we need to make sure we've really gone through that process really deeply with those brand partners as well. I think certainly from an investment perspective as well, it's good to have those brands in packs when talking to investors. That's not part of my role. It's something our founders certainly look after, but I think that's certainly something that's attractive to investors. And not necessarily just from the volume of customers you acquire through that partner, but the ability and the maturity of a fintech to be able to go and partner and establish those relationships and maintain them and keep them going as well. And then the key one really is customer acquisition. And that's something we've got better at with partners, is in the very early stages of discovery with partners. Myself and my team have built out a partnerships framework template that we go through. So before we even have a conversation with a business, we're doing a fairly high level, almost like a kind of recruitment process where you maybe do a long list of people. You could kind of whittle that down to a short list, and then we present that internally to ourselves within we call it a partnership Senate weekly that we go through. Hey, I've got this opportunity here. This is why I think it's good. This is why I don't think it's good. Shall we pursue it? And we've certainly got better from a contractual and commercial perspective of actually including in that early stage, this is what we know the partner needs to do in terms of engaging their audience. So we've got it down to the granularity with one partner we launched about 3 weeks ago with an agri marketing company, down to the granularity of how often they engage their member base, and what kind of access we get to them, because we know how many we need to do and the conversion rates to be able to access the right number of customers. Going into a partnership with just a commercial agreement, cool, let's go, it doesn't work. There needs to be that commitment from a big institution of what they're going to do to actually engage the customer base. And I guess for us, it's getting to a comfort level that the partner will listen to and treat you as the trusted advisor as we are to customers, but the trusted advisor to the partner and their marketing team around how we actually engage customers as well.
Yeah, and I think there's a lot of good points there, and I guess it probably kind of leads into choosing the right partner and what makes a good partner. And I guess you kind of alluded to, if you just have a commercial terms, the partnership could be completely underutilized or unsuccessful. And I guess I'd like both of your viewpoints in terms of what's your advice? Obviously, you guys do this quite a bit in terms of how do you make the most of a partnership, and I guess some of the pitfalls that you guys have seen, in previous sort of partnerships that probably didn't work. And maybe if you can just provide a bit of a view in terms of when in the life cycle of a fintech should they start thinking about partnerships? Because obviously there's a lot of newer fintechs that are just starting to build and thinking about scale. Rel, maybe I'll pass over to you first.
Yeah, I want to highlight, if I can, one point that you mentioned, Tim, which I think is sort of, it doesn't get enough attention in the space. A lot of companies, a lot of fintechs, a lot of platforms now go and sort of wake up one morning and say, I've got the greatest idea, I've got the bee's knees, I'm going to build this product, I'm going to put my house on the line, I'm going to put everything on the line, I'm going to spend the next year of my life sleeping on the bedroom floor, trying to build it out. And then they launch it and no one uses it. Yep. No one's come to the party. There's this wonderful idea that they think was going to change the world, and they discussed it at the kitchen table with their mum, and their mum said, yeah, honey, go and do it, you're going to kill it, and it doesn't go anywhere. So when do you want to think about partnerships? Well, before you think about partnerships, before you think about product, and I know we did this internally as well, before we even thought about Button, we needed to visualize what we wanted to build, and then go out and offer the product to the market and say, this is what people want. Do you want it? And yeah, of course, this is exactly what we want. Great. Let me go and build it exactly to your specifications, not to my specifications around the kitchen table, that I think, down the track, everyone's going to want. Because again, you can build it today thinking what people want, and a year later, the market's already changed. Or Facebook's come out and done, exactly what you've done, or Bitcoin to Ether, et cetera, et cetera. So, we want to take a step back that we did with Button and said, we want to prove our model before we build it and before we go and find a partner. And then once you find a partner, when do you do it? You find that partner in day one. And that's what we did. We actually worked on the Button product at day one with a partner and built it to their specifications. So that's when we knew at day one, when we launched our product, we already had a client. We already had a user base. We already had a test case. We already had transactions, et cetera, et cetera. And that's what myself and my co-founder, co-partner, Walter, when we went out sort of, circa 2 years ago and said, this is going to change the game. This is going to change business lending, where we're going to partner with all these platforms, and we're going to help businesses, across Australia and New Zealand and the world, et cetera, et cetera, et cetera. Well, where it really started was, and where it really sort of got the genesis was, who actually is going to want this? Who's actually going to use it? Let's find a partner to build it with at day one, and then go to market with the product. So in direct answer to your question, don't even think about it day one. Think about it when it's an idea that you wake up with it, in the morning.
Okay. And Paul, what's your view on that?
Yeah, I completely agree. I think we've something we bring back the whole business back to at the end of the week is customer stories, which is why we do what we do, right? The best way I've been able to, I think, actually demonstrate that to a partner is I've done it not in every single pitch, but in kind of down the track with discovery phase with potential partners, we'll actually get them to sit there and phone the Valiant 1300 number, or they'll go through the digital quote, and then they'll get a call back, and they're all amazed. They get a call back within 5 minutes, which is the I think SI is 10 officially, but it's always been within 5 minutes. Our team don't know who they're calling, and we get them to actually sit there and pretend to be a small business owner. And it puts, that might be a GM financial services in a large institution. It puts them actually, I've seen them sit there and sweat because they're like, oh, I've actually got to think like I'm a small business owner now. And there hasn't been a single instance where someone's come off the phone and gone, that wasn't very good. They've all just been amazed by the tech side of things and the digital experience, but then the human engagement where there's that opportunity to do that. Because let's face it, Australian small business owners still want to speak to someone where they can. So having that combination of digital and humans really helped. We're getting to a point now of the business where there is a digital straight through opportunity. So you don't have to touch a human, but equally having that opportunity to have the support there, and equally from a sales perspective, get the customer all the way through the funnel as well.
And I guess in terms of, from an alignment perspective, what do you both look for in terms of when looking for a partner? Is there one or two key must-haves in terms of proceeding with the partnership?
I'd say there's probably a couple. Target audience that the partner works with. Absolutely the size of that audience, segmentation. One key thing that I kind of talked about briefly around the commercials and contracting and having in how they engage their customer base is really understanding that. So if it's, to use Rail's example of MYOB, a small business owner uses MYOB on a daily basis. That's a great partnership opportunity where if my partner with Button and Button are in there in the face of the customer as such all day long, and in an in-product experience that really makes sense for the customer, that's an awesome partnership. Versus, perhaps an Australian, well done, Rail, perhaps an Australia Post where the actual level of engagement with small business owners is fairly limited. That might be the outbound sales teams. It might be secure pay as a business, the merchant offering that Post have. So there's different opportunities to engage where customers are highly engaged, and then it becomes more a brand piece. The audience may be a lot larger with Australia Post. Australia Post will touch every small business in one way, shape or form, whether they like it or not. So it's really about how we then actually activate that. And there's some pretty cool, exciting things. We're doing direct mail, which sounds pretty old school, but actually is very effective. And you won't get it any cheaper than doing direct mail with Australia Post, you'd hope. So I guess watch this space. That's something that's going out in the next week. So it'll be really interesting to see the results around that and how it works as well.
And I guess, Rael, from your perspective, do you spend a lot of time looking at cultural fit of the partner, and how do you, I guess, go through and make that assessment that you're going to be able to work and collaborate together?
Yeah, well, I'll just quickly say, Paul, I will be looking for that snail mail because lockdown 101 in Victoria, so there's not much else to do.
7 days.
7 days, that's right. There you go. So hopefully it comes every day, the 7 days. Something to do. No, so I guess, look, from our point of view, we're B2B. We've mentioned a number of times we're B2B. So if there was a platform that came up that was strictly B2C, that was, I guess, propagating consumers, we'd look at it and say, is it worth our time to integrate? Are there business users on there? What's the business case for us? Are we going to spend, time, money, effort integrating to then capture, 1% of a huge consumer market as opposed to 50% of a business consumer market or even higher? So from that point of view, that's the first step that we look at. We look at, do our products fit? Is it a product fit? Even before culture. Because if we can have the best culture, we can have the best team, we can have the best relationship, but if no one's using the product, what's the point? We've just wasted all this time, money, and effort. Maybe we've had a couple, almond mockers together or something like that. But at the end of the day, there's no transactions flowing through. So I guess that's our first thing. Second thing, I guess, from our point of view, and obviously again Paul touched on our MIOB partnership again, which is really the first time we understand that there's an in-app, in-workflow experience for that funding within the platform. So that's for MIOB is huge as well, because now they have the ability to really service their end users, those businesses, those customers, at the click of a button. If we look at our other partnerships that are in the public, Easy, which is again a huge opportunity for us. I mean, these are restaurants, these are merchants that are reaching out for funding. Now, if you're a small restaurant in the middle of Bullamakanka, who's going to try and fund you? You're not going to go to the bank. The bank will turn you away. You're going to go to a third tier lender, a fourth tier lender, fifth tier lender to try and access a couple $1,000s. You can buy some carrots because you've had a quiet period because of lockdown or something like that. But now you have the ability to open up this new funding stream, this new revenue stream, when they need it, where they need it, and how they need it. And again, this is a first to market opportunity. So when we looked at Easy, we said, it's great you've got a great user base, and it's great you've got all these, drivers and restaurants all over the country, but how can we actually help them? What do they actually need at day one? Oh, they actually need funding because no one else is going to look at them for this small amount in this amount of time in this turnaround period. Let us build out a solution for that. So definitely agree with you, Tim, and Paul as well. Culture is important and transactions are important. But if the end user is not the one that's actually going to be using it, it's a waste of time.
Yeah, no, I agree with you. I think just to touch back on the cultural piece, Tim, I think where you're angling at, the importance of personal relationships, I can't say how important that is. Typically founders of fintech businesses are incredibly smart, may come from very different backgrounds, whether that's tech, investment banking, whatever else it might be. They may not necessarily have the interpersonal skills. And equally, I think the other piece is the persistence to keep going with those conversations. When you go into a strategic partner, the first few conversations, you may not be at the right person, the right decision maker, or the right level, but actually having internal advocates who are the ones doing the grunt work, who are the ones who may overshare sometimes, but actually that really helps you. And having the kind of people, every one of the key partnerships that I've built, I've had the buy-in and support of the people who aren't necessarily a decision maker, to the extent where they'll help you with what you're presenting internally to get a pitch and get something done. Now, you don't get that by just having one meeting with someone. And there needs to be a genuine investment in them as individuals and people. I think there's probably, I'm a bit of a golf tragic, and there's quite a few partners where it's not just been over a love of golf, but you kind of bond over various different things. And the people you catch up with and talk about, and certainly having gone through COVID, everyone's met my kids because they will walk into a meeting. They've now got pretty good. They'll come in, I'm surprised they haven't today, but they'll come in and say hi, and then they'll just go and they'll be off. But I think that's something that's really key, personal relationships. And from a partnerships perspective, when it is the right time for a fintech to go and start building or trying to win those partnerships, having the right person on board to do that is really important. There aren't a lot of people out there with partnerships in their title. It's not a kind of square peg, square hole. It can be difficult to find the right people. Typically, they wouldn't necessarily have product experience. They might have the right network, though, to use. And I think you can teach a product or a proposition to a salesperson or a partnerships person, to give it a softer, fluffier title as it is. Let's face it, ultimately, partnerships is sales as a function. I think finding the right person is really, really important. So something I quite enjoy doing is actually being able to introduce other fintechs to potential partners, whether that's ones we have worked with, whether it's ones where the potential partner has a need and wants to partner, but Valiant may not be the right solution. And that's something.
Yeah, no, I'll add one other point to that, Paul. We run very much the same. Like we do a lot of work together, myself and Paul, and obviously we have a great relationship. It's on the same level as well. But what's also interesting for us is that we have a very much top-down approach in Button. Everyone has my mobile number, my personal mobile number. Everyone has my co-founder Walter's personal number, our COO, our CFO, our CTO. I want to be accessible. We don't sit in ivory towers. We run a flat structure. If there's a sales guy on the road, I want him to know that he's got a direct line to the CEO. I know, if there's a small client, whether they're doing $10,000 a year or whether they're doing $100 million a year, they have the same access to me. Now, I'm not saying I get calls every day, but they might call me up and say, how like Paul said, how are the kids, or what's going on, or I need a new limit, or I just want a new client. What do you think we should do about it, etc. So the fact that I have that level of comfort, and again, we're fully digitized, we're mass distribution, we've got great partners, we've got these amazing businesses, but everyone's got my mobile number. At the end of the day, they know they can call me on a Sunday afternoon if I'm at the park, and I'll say, yep, I'll give you a call back, or if it's urgent, let me get to it tonight. And I think that really makes the difference, whether it's a partner or a business, or even the tech partners, whatever it is. As long as we're accessible, that is the basis of really a good relationship.
Yeah, I'm smirking here a little bit because I think some of the comments you guys they're making me laugh, because I work with a lot of startup fintechs, and dealing with the founders is always quite interesting, because obviously they're completely passionate about what they're doing. And we've run some scaling up workshops, and just trying to get the rest of the team to get on the same page is kind of, the founders is quite important. So when you start to then have partners, it's that kind of meshing of culture and personalities is quite important. So I guess, if we move to now you're into a partnership, then I guess how do you guys look to manage those partnership relationships, just in terms of, day to day, monthly basis, because you both want to make sure you're getting the most out of the partnership?
Sure. I might sort of go first, and I think again I can say from a personal experience, because I can literally talk about our relationship with Valiant and the MYOBs of the world, etc. On a day-to-day basis, I think it's a flow through. So we look at it really as a 3-stage process. So Paul touched on the first initial, the commercials, the legals. Are we doing it right? Have we set up correctly from day one? Yep, everything's on track. Let's move to integration. So is it a technical integration? Is it a physical integration? Is it a referral part? I mean, there's so many different types of partnerships. Button's based around, in one area, referrals, in the other area, deep integrations with APIs and other sorts of partnerships as well. So it depends on what partnership we're doing at that point in time. But if you've now sort of ticked off stage 1, which is the legal side, stage 2, which is the integration side, then stage 3 is, well, now we're sort of all, holding hands, skipping in the meadow. Where do we go from here? So it's great to have the best partnership in the world, but if there's no transactions flowing through, like we said before, it's literally a waste of the time. So what we sort of, I guess, try to get out of the partnership is, number one, do they need it? At the beginning they said, yeah, we need it. We're going to scale with you. We're going to grow with you. And then, you get one transaction a month, and you're like, well, you've still got my mobile number. You've got, the partnerships guys working with you on a daily basis, the COOs trying to push the stuff through, the tech guys trying to filter through, the marketing guys are trying to push the business, but it's just not working. That should have been addressed at day one. You know, that should have really been addressed at those commercial stage. As Paul said as well, how are you going to drive this partnership? How are you going to drive this business? Are you not going to? You're going to rely on Button to do it. They're your customers. Button sits behind. We're powered by XYZ, powered by Button. You know, Valiant Solution powered by Button. Everything's powered by Button. We're not front and center. We're not on a window of David Jones. We're running the whole supply network behind David Jones. That sort of stuff, you know. So that's not a real example. That was a, you know, that's just got to put that out there with the you know, with the press that's coming out. So you know, these are real, you know, these are examples that could happen, you know, but it's about, I guess, that mass base, making sure that partnership actually works from day one, and that's how Button drives really that partnership.
Yeah, and Paul, I guess from your perspective, I guess because, you know, there's probably a lot of people that want to partner, and then maybe sometimes there's a rushing to the partnership stage, and then when it gets up and running, you almost have to do a bit of a reflection upon, is this working or not working, Ralph, to your point. And I guess, you know, how do you manage through some of those teething issues with partnerships to make sure that you sort of stay on track? And I guess from your perspective, how do you look to measure how the partnerships are going in terms of what's successful? What do you need to tweak? How do you end a partnership, I guess, if things aren't working?
Yeah, and look, that is something we've done. We've had to end, I think, 2 partnerships in the last 3 years where they weren't commercially viable. And that's not an easy decision to make when it's a business you've partnered with for a long time. And then again, there's personal relationships there, but if it doesn't make sense commercially, you need to be able to step away from it. You can be a little bit hamstrung sometimes when you have a limited number of partners and you don't want to be seen to lose a partner. You know, people make their own mind up of why a partnership finished, regardless of what the message is and who that comes from. But I think from a day one perspective, it's having that commitment around governance meetings, we've always set things up in the kind of last few weeks leading into launch, a kind of daily stand up between 2 teams, because effectively you have 2 separate teams of different businesses working on the same thing anyway. So why not get them together every day and say, it might be, hey, we don't need to catch up today, that's fine. But having that regular time in as you lead into launching. And then from launch, having a minimum of weekly catch up with, like I said, the teams that are doing the work. So that's the product marketing functions, to make sure we're keeping on track and regularly giving results, regularly giving feedback on what we can tweak to improve things. There's so many different levers with digital customer acquisition that we can change. We might learn something from partner A on Tuesday that we can share then with partner B on Thursday and actually help to increase conversion, and simple little tweaks around landing pages that we know will increase conversion. So I think having those regular meetings is important. Equally then having a kind of monthly governance meeting where you're going back through with perhaps the key stakeholder within the business or the key sponsor and presenting back to them around where things are at, any concerns they've got, anything that's on the horizon that you know, you don't want to have a complete curveball when you get to the end of a 3-year contract and that's it, you're finished. So I think having those, it comes back to relationships as well, the relationships where the individuals on the other side of the fence are not really on the other side of the fence. You're creating your own little business in that partnership. So getting their buy-in to wanting to support it and make it work is really important as well. But absolutely not hiding away from when a partnership isn't working, calling it out. You know, there's ways and means to do that. I'm sure I can be a little bit brash sometimes, and of course some people offside. but it genuinely comes from a place of passion and wanting to see stuff be successful. Yeah, not just from a personal perspective of wanting to see partnerships that we've launched be successful, but from a business perspective, and ultimately from, you know, it comes back to 20+5 on a Friday night every week of who's the customer story that we helped this week. You know, who are the top 3 out of 130, 150 businesses that we consider and go, yeah, this was an awesome story. And so many of those stories end with, they were, without Valiant, they wouldn't have got the funding they needed. And that's massive for me and for us as, you know, as a small business ourselves, effectively. You know, it's really good to hear those stories from the team when I may be that far removed from the day-to-day of on the tools working with small business owners. That really gives me the refresher, and I can guarantee that the following week I'm regurgitating those stories to partners as well.
So I guess when you guys are trying to measure success of the partnerships, do you guys, within the contracts where you're sitting down, do you have specific sort of KPIs, right? You talked about volume. Is there other certain metrics that you guys look back upon to sort of say, yes, this is working, this isn't working, or, you talk about the customer journey. So that might be at the end of the week, you can see, the loans that are being approved. But I guess there's your individual cases, but I guess if you're talking to the fintechs out there, what should they be thinking if they're entering into partnerships? What kind of KPI should they be trying to set when they enter into a partnership agreement?
Yeah, it's sort of uncommon to say this, but if you focus on the dollar and cents only, you won't make it. It won't happen. And too many sort of fintechs and partners and platforms, etc. They go to market and they say, I'm going to make $1 billion. I'm going to do 100 billion of transactions, and I'm going to be the next, Afterpay, etc., etc. That's not what's going to make that's not going to make the partnership. That's not going to make the fintech. It's not going to make the platform. That's not a KPI. A KPI is if the end user has a seamless, frictionless experience. In our case, if that business is clicking that button, if the platform partner is happy, if the platform partner is happy to refer you to other platform partners, and their platform partners refer you to other platform partners, and that's really that virality of your own product going through the various partners, and those end users on those platforms again telling their friends, and now those friends are on different platforms and say, well, why don't you have Button, or why don't you have Valiant, etc. And we've seen that previously with ourselves and Paul. There's, again, that Paul touched on, there's times where we're talking to a partner and say, you've got to go and talk to Valiant. This is their game. This is their, this is their play. It's not for Button, and we don't want anything out of it. We don't ask for, golden handshakes. We don't ask for bottles of whiskey or anything like that. We say, we know if Paul's happy and Valiant's happy, and they're going to drive their product, eventually it's going to come back to Button, because eventually one of their other products will have a need for a transactional funder, for a button, for an overlay, whatever they need, and we'll be able to fill that gap. And then if you solve that problem, that's when your money will come in. That's where you get the mass distribution. That's where you get the transactional value, the margin on every transaction, the interest rates, the sign-ons, etc. And that for us is really key KPI. Take care of the customer, and as they say, I think it's what they say: take care of the customer, and everything else takes care of itself.
Yeah. Well, it's the second time I'm really liking you. The second time you mentioned whiskey to me in the last 20 years. So Paul, just in terms of, do you have any specific metrics, maybe not around the dollars and cents, but maybe some of the soft intangibles that gets you quite comfortable that the partnership is working?
Yeah, conversion would probably be the biggest thing from us through the funnel. And that's the one where I say there's levers that we can play with to increase conversion, from whether that's responding to an offer, opening an email, clicking on a landing page. They're the kind of key things that we can help the partner control. The actual acquisition of customers into those offers is really ultimately down to the customer, down to the partner. But certainly those conversion metrics, and they're the metrics that potential partners build models off to see if there is a commercial outcome there. So if we're not delivering to, conversion rate from lead to opportunity, or opportunity to application to settlement, if we're not meeting those conversion rates on our end, I can't stand there and say to a partner, well, we're delivering everything our end. We need more assistance from you to help get the message out to the right customers. So I think they're the key ones. And it's very easy for a fintech, I think, to go out to a potential partner and say, yeah, look, we'll convert at 25% from lead to settlement. That doesn't happen. That doesn't happen anywhere. I think some traditional kind of finance brokers have done that previously in maybe the resi space and commercial, but they've never actually achieved those type of conversion levels. So I think being very honest and upfront with the partner sets it up for success. But again, you're building an honest relationship with the partner as well.
Yeah, I think maybe I'll have the two of you talk to my office managing partner, because I sometimes some unrealistic goals. So
Well,
Yeah.
it's true, actually. I'll just say it's true on that point, Tim and Paul. I should say that a lot of times a platform partner will approach us and say, we need Button, we need this technology, we're gonna deliver you X, Y, Z, and you're gonna change the game, blah blah blah. And then we've been through the whole onboarding process and the commercials and the terms and the integrations, etc., and then nothing. And we took their word for it. We did our own DD, but at the end of the day, there's got to be that level of trust, saying, are you actually delivering what you're going to say you deliver?
So Rehan just gave us a reminder. We only have a couple of minutes. This hour's gone very, very quickly. So we'll just sort of finish with just a final question, I guess. Paul, we'll start with you. What do you think lies ahead for partnerships next 12?
Yeah, generally for fintechs or?
Yeah, fintechs. Yep.
Yep. I think there's a lot of opportunity out there. I think it'll come down to almost getting on the flip side of things, where the fintechs actually hold all the cards and we can choose who we want to partner with, versus where it's traditionally been, pitch. We need to be fussier around who are the right type of partners for our business to work with and grow with.
Yeah.
Well, what are your final thoughts in terms of partnerships reshaping financial services and industry?
Well, I'll sort of round out. I definitely agree with Paul 100%. Like I think the cards have definitely changed, even with Button, where we were a year ago to now. We're exactly right. We were pitching, and now we are literally being pitched on a daily basis for our product mix and our suite of products. So that for us it's amazing. For them it's also amazing. But secondly, the big banks. You can see what the big banks are doing now. We haven't really touched on. The big banks are now going and trying to partner and buy and do strategics with all these fintechs. That is the future, because the big banks know they can't compete. There's too many layers. There's too many ivory towers. The operations guy and the tech guy and this manager and that manager. They can't build it out. So I think that the future is the banks partnering with fintechs, getting that distribution, but allowing the fintechs to really foster what they do best, which is financial technology, digital distribution.
Yeah, I think you're right about the bigger banks. That definitely was a theme, last week at Intersect, and even at some of the Fishburner events that I've been here in Sydney, and even a lot of my fintechs have been approached by the bigger banks. So, you're starting to see the bigger banks knowing that they can solve part of their issues with acquisition or partnership. So I think that's going to be a watch this space for the next 12 months. That brings us to the end of the discussion. So I know that went pretty quick. Thank you, Rael and Paul, for your excellent insights. And hopefully everyone enjoyed the session. Again, apologies. This was the third time we've scheduled it, but hopefully you've enjoyed the last session for the digital festival as part of Intersect. And just a quick shout out to Fintech Australia. It was a great event last week. Rebecca and Rehan and the team did a fantastic job, and we're looking forward to coming down for the Finnies in July, and hopefully everyone has a great Friday. Thank you very much.
Thank you.
Thanks, Tim. Cheers, Rael.
Thanks, guys.
Thanks. Bye.